Good afternoon, everybody, or good evening, depending on when you're watching this. This is Jeff Scott, and welcome to my weekend update for October 14, 2012. My contact information is there, should anybody need to reach out to me. I will be posting this on my YouTube site. You can search for my YouTube site. Obviously, you already have this, although you may download it somewhere else, but at my initials, JAS, Cancer Doc, would be the search term. This is posted on HGSI board as well as my YouTube site for those that do not participate with HGSI. As always, and as I always start off with my disclaimer, this is for educational purposes only. I do this because I do this anyways as I do my routine on a Sunday. And I've always learned that by actually speaking through my thoughts, I do a better job personally of remembering and analyzing things. And so I will continue to do this as long as my schedule allows. Unlike Ron, who actually introduces us to a lot of new techniques during his weekend reports, which I've always enjoyed, I really do this as I go through my sense of the market. So it's more of how I use HGSI and some of the other tools to understand what's moving in the market and to get an idea of things to buy and sell as the market ebbs and flows. I'm a doctor, not a broker, so don't listen necessarily to any of my recommendations because most physicians lose all their money in the market. And I do this because I like to do this. I'm not affiliated with any software company. Any tools that I demonstrate are tools that I have purchased and I use on my own, although I am being offered opportunities to review other people's tools, which I'm happy to do, but I probably would still buy them before I talk about them. It makes me feel less biased. So this will be as much as an hour, but not any longer, so probably finishing by about in about 55 minutes. I will spend, again, most of my time on the market. If you don't understand why I spend my time on the market, then you don't know how I invest. I'm a top-down investor. And all my decisions are going to be based upon what the market is doing. And if I don't sense that the market is my friend and moving in the direction that I personally am thinking of investing in, then I really need to be careful of what I do. For those who have traded a long time, you know that it doesn't matter how good your stock picks are. If the market does not go up, your stocks probably don't go up much either. We will look after the market at a little bit about sector rotation, what groups are working now, see if we can find any stocks, as well as look at some shortcuts. So without much further ado, I want to mention Ian and Ron. If you have not registered for their upcoming meeting, they have hinted strongly that this might be their last one. These are both have been just outstanding at these programs. And I know there's still seats available. It'll be October 27th through 29th. In Palos Verdes, and I'll have an opportunity, I hope, to go through my top stock picks to put together a leaders index. And as we look, for those who are unfamiliar with HGSI, websites at highgrowthstock.com, Ron's free reports, when he does them now, are also on the website. You can click under reports, and it's one of the few places that will offer you access to free trial software at really at no cost to you. As I always like to say, the stock patterns are cyclical, and this is a fractal finding, so it doesn't matter what time frame I'm looking at, I will see similar types of findings. And you have to really know when you're going long or short or holding, where is that market? And I've been saying the last couple of weeks, I thought we've been on this shoulder here, not sure if it was just a pause before we go back up, or are we turning over? And certainly the last week felt like turning over, although as we will look at it on low volume, and although I think that's where the less resistance is to go down, I'm not totally convinced that we won't get a news flash that will change things. The most important thing as we look at things tonight, this afternoon, is the futures are not open, and there's still plenty of time for newsmongers to affect what's going to happen to this market. And why I need to know where the market is, because I'm not going to fight the trend. I want to go long on pullbacks and an uptrend. I want to short on retracements or potentially buy contra ETFs in a downtrend. And I want to go back and forth buying at support, selling at resistance when the market is in a trading range. Website has a number of webinars and useful information for highgrowthstock.com. Parting message is always be your own guru. You need to invest in your business, which is tools and software. Continuing education matters, such as the PV meeting I already mentioned. And we have to continue to trade what the market gives us, not what we think it should give. So on that note, let's start and take a look at a couple of things. First thing is, many of you know a few weeks ago I came up with an index that I said that I was going to watch, and when that index rolled over, I would know that it was time, that, well, obviously it's already been that time, that the market was broken, and that, you know, sometimes the leaders coming up to a market top, not only will they fall the hardest, but they may not be the leaders when the market goes forward. And so as we kind of take a look and we go into my usual chart, I now call it the, where is it? Where did I put it? Kitchen sink with high jump. Ian can have his water closet. I have my kitchen sink. And the big difference is I took out what I wasn't using much, which was %B and B. I use them differently and at different times, and I put in the high jump bar, which to me has really been a critical thing. I'm hiding the 4s, 2, and 13 just for the purpose of space, relying on the ribbon. And other than that, it's the standard chart that I've shown before. And I do have a shorter duration weekly bongo, which I'm also going to continue to keep hidden so as not to cause confusion. So that Labor Day weekend index behaved until it truly broke down. As you know, the market's fallen hard the last 4 days. It broke below the 17-day for good on the 10th, and it's had a couple of bad days, and it's clearly broken. And when the leaders index breaks, usually tells me it's time to become more defensive. For Jeffrey, who is me, I should talk like that in the first person. For myself, I am typically leveraged. I unleverage when I'm concerned about the market. I buy protection. I raise cash, and that's currently the mode I'm in. But to be honest, I'm not totally in that mode. I still have a fair number of long positions. Now, one thing I also like to do is to look at the last week. Where's the money been moving, and how has the market done? So I run a group performance analysis. I run it every Saturday morning, and I look at the different groups that I track and try and get a sense of it. Something is working and how is the market doing. So I ran this on Saturday and wanted to see what happened over the last week. So first thing I scan is black and red, and it's pretty clear there are a lot of red and not a lot of black. That's pretty easy. The interesting thing is nothing really worked. But the things that worked were things that were already beaten up, things that came out of my bear searches. And even stocks breaking down actually outperformed. So when you start to see the leaders failing and sort of the junk or the things that have already broken being some of the better performers, it kind of gives you an idea of you don't have a very healthy market sitting in front of you. If you look and find, I also run to the S&P 500, and for the week, and if you have pain, you know, pretty clear why. The market was down substantially, and you can see here with the S&P 500 was down 2.21%. Now, interestingly, growth stocks performed similar to the market. HGS 100, which is in this case was a little bit over 100 stocks. It could be up to 150, and these are selected by the program for me, was down 2.25%, so certainly down about the same as S&P 500. While on the other hand, the IBD 50 was down a little bit greater. Since it's got less stocks, only 50, it sometimes is a little bit more volatile and may have larger deltas than the S&P 500. Other things of interest, you know, as you can see here, my buy watch, and then if I just looked at the box 1, 2, and 7, my buy watch did horrible. Now, the buy watch is a watch list, and it means that if the market goes the direction that the stocks are, and I was looking for buys, then I would expect to see, then I would be interested in buying those stocks. Since the market was really down from the get-go, I triggered very few buys. So it's purely a watch list. It's not a buy list, and I think that's very important to recognize. The best of Woodward and Brown, which meant the best performing stocks on Friday from all the different smart groups, I think one can clearly see really underperformed. So what was the worst stocks, my bearish picks, outperformed what were the best stocks. So certainly a market that was challenged. Some of my favorite filters, the Tim Higgett filters, some of the breakout stocks, some of the pullback stocks that I basically make my living on sometimes on the pullbacks, they underperformed. Now, interestingly, I have a number of different portfolios, and no one says I ignore these during the week. So it's not to say that I didn't make changes, either going a little bit more defensive or unloading positions, and I did sell several things during the week. But if I took the stocks, and I have a lot of stocks, I know that I had going into the week, they were a little bit to the negative, 60-40 to the negative, and they were down less than 1%. So I didn't, I saw some big winners and some big losers in the stocks that I started the week with, but interestingly, really didn't see much of a change in my personal portfolio. But obviously, with the high growth stocks and the S&P 500 all performing at a relatively bad level, it was a tough week all around. So let's start to look at the markets. Is there any strength? Is there a place that we might want to be fishing? Or is this a good time to go to contra ETFs or go to cash and go fishing? And certainly, the buy and hold type, this is not a fun market. I'm using a little bit lower resolution today. Hopefully this will come through clear. I was afraid that the high resolution that I used last time, although I loved it because things were so brisk on my end, was probably not perfect on your end because things were kind of small. So a couple different things. Certainly I noticed when I looked at charts that maybe Dow Jones theory folks might be excited because the transports had a good week. In fact, if we look at the transports, oops, I hate when that happens. You can see that the transports had a low here, and if we just take within HGSI and connect a line from, say, the lowest low, right about here, to the highest high before it pulled back on Friday, in 10 periods, the transports have gone up 4.2%. Still below the 200-day moving average, technically still in a downtrend, and and clearly not showing a ton of strength. But from a relative perspective, the strength of the market on Friday was in the transportation average. I'm using the top-down view in my warehouse, which, as we talked about before, is a balance between the one heavily weighted towards short-term with the 1-day and the 5-day, but also, there goes my trade station, so I'll have to reload that if I want to do anything with it later. Problem with new versions. So this heavily weighted towards short-term, but it's all technicals looking at force indexes in 1- and 5-day performance and some accumulation distribution. Volatility could be a precursor that this market is about to change. And it had a huge move in 1 day from a percentage basis. But when one looks at the VIX, and if you trade the TVIX, you know what I'm talking about. It's really been hammered of late, and near multi-year lows, the TVIX is almost irrelevant now. VXX, unlike TVIX, did a reverse split, so the impact on the VXS might be greater than on the TVIX, which is trading for less than $2. Probably it needs to do a reverse split as well. I would not be surprised to see the VIX to run up here to that 18, which would be the 200-day moving average, which would be the obvious resistance. But if it does that, it'll be interesting to see if it just bounces right back down. Not even made it there before, but it runs up, it pulls back. You won't see a major market rollover without some activity in the VIX, but whether the VIX leads or follows that change remains to be seen. There's not been much constructive action. It's just been up and down, up and down, up and down. The U.S. dollar, which would be opposite to the market as well. When the dollar goes up, your commodity stocks go down, as do usually the markets. And if you look at where the market's been kind of tough over the last couple of weeks, the dollar has held its own, and on Friday the dollar had a decent day. So the strength of the dollar will probably go a long ways as to determining the overall health of the market in your portfolio. And although a strong dollar might be a great thing long term, might be great for the economy long term, might is a big word, a strong dollar is not always great for a lot of stocks. And I think this market has gone up often on days the dollar's done poorly. If the dollar's strong, you'd expect gold to have had a tough time, and gold is in the middle of the pack, and you can see gold has had a little bit of a pullback. Now, when we start to look at the major market indices, which I'm going to jump to right now, in fact, let me go ahead and, I should have saved that. That was a mistake. Let me go and restart TradeStation, and then I'll come back to it in a little bit. Not sure if you have access to 9.2 or not. 9.2 is the latest version, and I've had a lot of buggy issues with it. But I guess that's what you expect when you do beta testing. So when I trade, I don't use this computer. I use 9.1, which has been more stable for me on another machine. So let's go back to HGSI. So gold looks weak. Yeah, I got to fix that thing. Let's take a look at the S&P Composite 1500. This is actually one of my favorite indices for a number of reasons. And I think I talked about it last time as because it's got the 500, which are the big guys, the 600, which are the little guys, and the 400, which are the medium guys. So it's one index. It's an index that you can build up from the component stocks, and it's one index that really represents a broad-based market, and it's a managed list. So one of the things that I talked about last time is I expected, or I've been talking about, is to pull back to the 50-day moving average. And on my charts, the blue is the 50-day moving average. And if we look at the data, it closed at 328.62, and 328.93 cents is the 50-day moving average. So technically, it's a few pennies below. This is, to me, a critical point. I mean, we could take off my trend lines now because they're done. They've broken through the trend lines, and let's see if I can pull those trend lines off and see if they'll go off. All right, and what you have now is a free parking opportunity, and you can see once we closed above it consistently, it held, and it's been, in many stocks, the 200-day moving average, many indices could be a great buying point if it provides support and hold. So we're sort of at an important time in the market as we go into tomorrow. So that will be something that I will be watching carefully, as I'm sure you all are. Now, if the 200-day does, or the 50-day doesn't hold, then we go down to the 200-day moving average, and that's really our last gasp. So just out of curiosity, see if this will work. We go from the high of the market here. Let's say I take it down to here. Let's see if that works. So that would be a 7% correction. And you think about it, that's not a big deal. It's not unsurprising. It's not that rare. And maybe we should be expecting that to come in. Now the 200-day moving average is actually rising, so we may get altogether less than the 7%. But that's not to say that that's not going to cause a lot of pain in a lot of folks' portfolios. While we're looking at it, let's take a look at the ones we might be more familiar with. We'll take a look at the S&P 500, which we will see here. It takes a few seconds to generate. And I'm going to start killing my trend lines because we've now broken through them. So on the S&P 500, it looks identical. And again, sitting closed at 1428.59, and the 50 is 1428.37. So 22 cents above the 50-day. So that certainly tells you important line in the sand here. And again, you can see how the 50-day has held, at least on closing prices. And, you know, on this puppy here, they pull back that 200-day moving average. Again, it won't be fully active because it's going to be rising, again, about 7.1%. And I hope I was looking at the, I think I was, the 1,500 last time. If you look at the Dow Jones Industrial Average, you know, broken record. Looks like it's got itself some type of a doji occurring on the 50-day moving average as well. So I think it's pretty clear to me that we are at a critical support point in this market, and that my expectation is that we either see a bounce from here, or this market goes down and tests the 200-day moving average. And so I think tomorrow will be a very interesting day, to say the least. Or perhaps I should be broader based and say this week. Oil, it sort of has a yin and yang going on. First of all, if you look at the USO being below the 200-day moving average, by my definitions, that means it's in a downtrend and it's weak. And it's being driven up by the concerns in Iran and the Middle East, and it's driven down by the fact that the economy, in most people's minds, including mine, is on the way down. All right, so that's looking at major market indices. Look at a couple other things that might give us some clues to where this market is going. So last time I was on, I talked a little bit about the Commitment to Traders report. So as you can see right now, since this is Sunday afternoon that I'm doing this, I've got the red zone on in the background. I've got my fantasy football scores on another computer, and then I've got a live game going on. So doing these on Sunday afternoons is nutso if you're a sports fanatic like I am, but it's something that I like to do. So it is what it is. But you can see the indices, there's nothing going on right now. The market isn't open yet. Even though it looks like there's a change in the Russell, there's no bid or ask. This is all old stuff. So let's take a look at the Commitment to Traders report from this week. And we continue to see blue above the line, suggesting to me that the professional speculators are going long this market. Now, as I've talked about before, and I guess I'm going to look at the red line a little bit today as I'm trying to, in my mind, try and make some right or wrong with what this actually means. What I've mentioned before is the yellow, which are the people like us, the individuals. We bought as the market fell. The professionals, the hedge funds, started buying as the market got near a bottom, and they bought most of the way up. We came in late as individuals and sat out much of this phrase here, this move up here. So switching the blue above the bar, and the way I like to interpret this, I thought was very bullish, somewhat bullish. I think very is a big word for 4 letters, and suggests that we may have some strength and recovery in this market. If you look at the commercials I've talked about are, it might be, for example, somebody who their business is hogs, and they're afraid of that the corn feed from the hogs is going to be expensive. So they may buy futures on corn so that they get advantage of the price if the futures, go up, and it negates some of the cost of corn that they'll have to buy. So I was listening to a broadcast, and they argued that the commercials were at their highest positive with the market pullback, and that suggesting that this new low, or the low area that we're seeing here, is telling us that perhaps some of the commercials are predicting a pullback in the market. I don't totally get this, and I'm going to do some more investigation of it, but this was a freebie that came out from the Elliott Wave group, Elliott Wave Forecaster, which I actually subscribe to. But he made a good argument that we should be looking not just at the gold and the blue. Now, as a Michigan fan, we'll call that maize and blue, at least until they play Ohio State, and I live in Columbus, and I have to change the colors or risk my life. But he suggests that we should be taking a look at what the commercials are doing, and the fact that the commercials are getting lower suggests even more risk in this market. And that might be true. Different philosophy than what I've learned from John Person, but still interesting. If I look at Elder on the indices, take a look at the S&P 500 futures, which will mess up this chart. Oh, I guess it didn't. And what can we see here is that they are red, and that's meaningful to me because Elder has taught me that I can't buy stocks when it's red. I can either sell stocks or stay neutral, and that's clearly red. You can see a weekly is still blue, as is the monthly, but they're definitely pulling back, and my targets here could be down. This envelope is likely to hold, but that's still a drop of 25 more, 30 more points. So Elder would be consistent with this being a market where the less resistance is down. So in top-down investing, that's kind of how I invest. The most important thing is the market. I think we beat the market up now. Does this mean the market doesn't go up 300 points this week? No, the market's oversold, and I can't predict what the news is going to tell you tomorrow morning or Tuesday or Wednesday morning. I could tell you that right now the market's weak, and you'll know it's weak from your portfolios, but this has been a news-driven and not really a trending market, so we'll see what news we get. So if you decide you want to go long, then you probably need to start thinking about what am I buying and where's the strength at if I want to go long. So if the market makes up most of your strength of what your stock is going to do tomorrow, the group and index that your stock is in will also be quite important. So as we look here on the top-down view, which is all technical, but looking at somewhat of a broad-based view, 142 stocks, or indices rather. If I go down and look at force up, you can see only 20 of them are positive. If I look at force down, only 74 of them are negative. So clearly, based upon the force index, which is giving me a 2-day exponential moving average of force index, really a short-term indicator, pretty clear that the market is weak. Just wanted to pull up from EdgeRate, one of the other tools that I use for confirmation. This is giving me an indication of how many stocks are within the S&P 1500 are above or below the 50-day moving average, and at least, or should I say the midline, not the 50-day moving average, but the midline of the Bollinger Bands. And for those that aren't familiar with this piece, this is actually quite powerful. Bollinger Bands has a midline, and then it's got a volatility determined band above and below. And 90% of the activity of that stock or indice are going to be confined within the above and the below Bollinger Band. In a downtrend, the price seems to rotate between the mid-band and the lower band, and an uptrend between the mid-band and the upper band. So you could learn something if you could decide what percentage of the stocks are above or below that middle band. And so one thing that you might want to look at is, can you break that out? And what EdgeRater does is it takes the 1,500 stocks, and it gives me a nice picture, and it says that only 26% of the stocks are above the midline. So that tells me that another evidence of a weak market. Now, another thing that you might want to look at with the Bollinger Bands is how many stocks are below versus above. Since 90% of the time you're going to be in between those bands, you might guess it's pretty easy to figure out what happens in circumstances when you go above or below those bands. And it's simple. You snap back into between the bands. So another thing that I got out of the EdgeRater today, which tells me we're starting to get interesting, is that 12% of the stocks are trading in this band below zero or below the lower band. Doesn't mean that the correction is over. It doesn't mean that we're so far overbought, oversold, that it can't get even more oversold. But it starts to get to the point where I'm starting to look for a potential bounce. That said, it still could be too early, and I have to keep that in mind as well. Shut this down, free up some bandwidth. So now let's go and look at some of the industry groups and see if we can identify. Now I'm going to do a audible, and I'm going to recognize that some of you are going to say, Jeff, this is great. I don't want to do this much work. So one of the things that I do for shortcuts is I do something called a group inclusion report. So I'm going to put together a list real quickly of maybe the top 10 or 15 stocks. And then we're going to compare that list to the ones that we come up from the more laborious work. So we're going to go into smart groups, and I'm going to take a list looking at, these are smart groups that are done automatically for you. Go into Tools, Group Inclusion Report, and the hypothesis is that the best stocks get into these smart groups. And if you're a stock that's in many smart groups, then that suggests you're really a good stock. So let's look at some of my favorites and see what we get. Pocket pivots. Then I'm going to pick the ones that I like. Best criteria. ERG 240, strong EPS relative to group rank. Growth, HGS 100, Leaders Index, quarterly EPS acceleration, strong EPS relative strength near 52-week high. We're going to make a group from it. We're going to put it in today. We're going to call it AAAA Web Gems Top 10. Now we're going to hit OK. I'm going to call it, as I said, Web Gems 10.14.12. I'm going to hit Save. So a couple things just happened. We've identified some of the leaders in the market, and we're going to come back and look at these in a few minutes. These are how many groups and which groups they actually made it in. So we shut this backwards. I also created Web Gems. And they only put 8 in, and it may be because of my filter, but it's more likely because after the first 8, there was a big tie, and we would have gone above 10 stocks. So we'll come back to them as sort of the shortcut. So you might just want to work with these stocks. And I could tell you, I know many of those very well. Big winner right now. J.B. Hunt had a great Friday. Macy's may be getting ready for a buy. Patrick has had a nice move. Ultimate Software has done well. TransDigm is one of those expensive stocks that's doing great and continues to do great. And we'll come back and we'll look at those before the night is done. So let's look wireless telecommunication services. Heavily driven by Sprint. I usually want to look at stocks that are performing better than their index. Sprint has been performing well because of M&A talk, and it's hard for me to buy stocks because I don't know if all the win is already priced in. And you can see it had just a huge bump on Thursday. This is looking at 2 days because it's the 2-day force ranking these. And yeah, I mean, if you're a long-term bull on Sprint, then you could say it pulled back to 50-day moving average support and it's going to run. I'm a skeptic, and I'm not really too interested in Sprint, although I'll continue to watch it. It pays no dividend. And what happened this week was SoftBank potentially making a huge investment, and it looks like they were going to give it cash. The cash would fund an acquisition, and then they would end up becoming the majority owners of Sprint. A lot of acquisitions in this space were talked about this week. I'm going to skip it and go backwards. Computer hardware index. You know, I guess we call these bottom fishing opportunities. 3D Systems Corp, which overlaps the energy, has probably been the leader over time. I think Stratasys is in a buyout scenario. You know, do we want to buy Dell? You know, if you are a growth stock investor, you don't want to buy Dell. In fact, as I look at Dell, I don't want to buy Dell either, and sometimes I do various different things, but clearly it's a bottom fisher. It's pulled back to the bottom. It had a positive day on Friday. This is looking at 2 days behavior change, and over 2 days it's gone from this point to this point. So not a big dollar difference, but probably a pretty decent difference when it comes to percentage change, percentage gain, etc. I'm not too interested. Hewlett-Packard doesn't look a whole lot different, except it's perhaps starting to base sitting down where it's at right now. And I guess that could turn out to be interesting. All right. But not interesting for me, and I think I've heard enough on the TV that that's going to be dead money for some time. 3D Systems, as I mentioned, this has been a leader over time. Certainly was in a nice uptrend. It broke the 17, broke the 50. I'm probably not a buyer of this until it shows we can get above the 50. It's got a long-term weekly bongo, which is red. It makes money. It's had some stubbed its toes on the earnings per share growth, and definitely looks considerably, better than the other two, perhaps in some ways. But until it breaks above that 50-day moving average, I'm neither a buyer nor a believer. Department stores. Macy's made it to our other list. Just look very quickly at the top three here. Maybe look at, well, probably skip on time. So JCPenney's, again, below the 200-day moving average, which is a place I'm not usually a buyer. It did have a pocket pivot and a kahuna come in Friday. Is this a cup? Is this a handle? And is it going to run? Not sure it's the perfect kind of a handle, but it certainly was quiet in that handle. Probably a little deep for my taste. But at the minimum, it's something that I might put on a watch list with everything turning green except accumulation and distribution. I don't like next quarter's earnings. And this looks like a big jump, and I always wonder how much of that's real estate versus actual sales. Kohl's Corporation, also a little shallow pullback here. A little bit stronger. It's above the 200. If it gets above the 50, I might have some interest. Weekly bond goes green. It makes some money. Doesn't knock my socks off. Macy's, when I looked at earlier today, I liked a little bit more. And you can see it's a little different than the last two. You can see right off the bat it's above the 50 and it's above the 200-day moving average. It had pulled back, and when I do a buy list, I call this typically, when it's sitting down here, it's a pullback. When I saw these pocket pivots in a kahuna, it became a pullback ready to run, and it's had a nice run. It pulled back again here to the 50, had a pocket pivot. I think this one runs again, and Macy's is in my buy watch for tomorrow. And again, I'm not buying anything unless the market goes the direction that I expect, that I need it to do to go long. I'm not going to say expect it, because I think expecting is down. Sort of one of the caveats of the stock, of HGSI and any program is when you look at earnings, you have to know where the earnings came from. And I'm a little suspect of this $3.90 earnings on a quarterly report on a $12 stock. And, you know, it may include some one-time things like a sale of a business unit, a sale of some real estate. But if there was that much positivity coming in, it doesn't make sense for the stock to be $12. It kind of looks, you know, similar to Macy's, a pullback to the 50, a move up here, and maybe this thing's got some legs. Not a leader by any means, and perhaps not the highest quality on the department store stocks. I think to me that's Macy's right now. Coal, you know, I think this is very much dependent upon who the president is. Percentage-wise, they had a very nice week. Numerically and chart-wise, they all look the same, which is below the 200-day moving average. They bumped after the first debate, perhaps bumped a little bit again after Ryan. But you got to get above that 200-day moving average to matter. Everything's green. Maybe they're just early, a couple kahunas. Maybe I should be jumping up and down and buying coal. I'm still not a believer. Arch coal. These are coal for the electrical plants would use, not steel for the most part. Perhaps they're reflecting with these guys the higher natural gas prices, which might allow them to increase some of their prices. Now, Consolidated Energy looks a lot stronger than the others, got above the 200. And this is the type of pattern that you want to see. I'm not a big fan of their negative earnings per share growth, but this might be something worth looking at. Why did this happen? If I don't sound that bullish, because I'm not, you know, airline index, if oil was to weaken, and, you know, is this a time to get in? I've never been a big winner in airline stocks, but, you know, you've got Delta Airlines broke across the 200-day moving average, failed it. Is it going to break again? It's got a pocket pivot. Everything's green, perhaps. Might be a time. Southwest, not as strong as Delta. Maybe it gets above, let's see, above the 50 before I got interested. I always prefer a stock that looks like it's in an uptrend than one that's below the 200. U.S. Airways Group, you've got a bit of a squeeze coming in here at the 17, just above the 50, and the 8-day there, the 200. So they're all lined up nicely. Little pullback. Might want to keep an eye on U.S. Air Group if I want to get in here. I'm not the most knowledgeable when it comes to buying and selling of the airline stocks, but they made the list, and there's not a lot here. Cable and satellite, whoops. You have to make sure you highlight before you right-click. Comcast has a beautiful-looking chart. Have pulled back to the 50, had a big kahuna there. Comcast pays a modest-sized dividend, and you know, I would have to do some research to understand why there's two Comcast in the dictionary or in the user list, and I'm, you know, would want to know more about the differences. They have very similar patterns, lower left, upper right, and similar dividends. So I need to learn what the difference is between the two. See if there's anything else here on the longs that are worth me looking at. Building products, the housing stocks got hit hard over the last week. Patrick is one of those pinball companies, I think. Mental block. One of those companies that might go up in response to a boom in the building industry. Patrick Industries is a veneer plywood, structural wood, manufacture housing, recreational vehicles, so strengthen the economy. And you can see pull back to the 17-day. Looks like it's running again. Everything is green. Doesn't make any money for the next couple of quarters, which I'd be suspect of, but certainly has done well. Well, I think Terex and one of the other companies on the list I'll take a look at in a few minutes also were interesting to me. Trucking, I showed you the transports were up, so we already saw the airlines. A big move was on J.B. Hunt this week, and it may be too far gone already for some taste. And you could see it had just a huge gap up on Friday with a pocket pivot. Now, if one looks at a weekly chart, you might not think it's too far gone. On the weekly chart, it had a very orderly pullback to the 50 weekly moving average. It's had a number of pocket pivots on the weekly, a number of kahunas, big weekly volume came in. This might be a perfect time to jump into this stock. Makes money, and certainly a nice pullback. Would have been a nicer time, I think, to buy it 2 weeks ago. Others that looked interesting to me, Old Dominion, I thought had some nice stuff till let's get to a daily chart, although the weekly is nice. And you can see what I liked here is I'd like to see it get above the 50 because I think the 50 runs the risk of being resistance for some period of time. But what I really like here is that it's pulled back, and I'd like to, if it breaks above the 50, it might have some room to grow. It too has some modest earnings per share growth, but the leader's clearly J.B. Hunt, and on the weekly it doesn't look too extended. All right, so I have to tell you that I'm not getting all that excited here. So let's take a look at the negatives. As I've said multiple times, I'm not a great shorter, and what I have a tendency to do in times of market weakness is to delever, raise cash, and buy contras. In the past, I also bought a lot of volatility, but it's not working right now, or hasn't worked. Maybe now it'll start working. So finances had a horrible Friday despite good earnings. So not just the big guys, the regionals showing some weakness here. And let's just take a quick look-see and see if there's anything here that looks attractive to short. This breaks below the 50. It runs down to the 200. It's hard to make money on a $1.30 delta, so probably don't have a whole lot of interest on that one, but could be shortable. SunTrust is sitting on that 17. It had a negative pocket pivot on Friday. The earnings per share growth. I mean, you might be nervous shorting one of these stocks. I certainly would be. PNC Bank. Again, if it runs down to the 200, there's not much room for me to make money on that. So no interest there. There was some weakness in the big banks. Now, they always make it to the top because of their volume. Their earnings were actually pretty good. But as we look at Bank of America, negative kahuna, pulled back down to the 17-day moving average. Citigroup, let's take a look at J.P. Morgan, who did have good earnings, but you could see it had a down day, losing 50 cents and a little bit over 1.1%, negative pocket pivot. You can't tell, but had a good volume day as well. So it's had actually a nice move up. Didn't pull back that much, but based upon the volume, it made it on the 2-day force as a negative. And I think this is something that needs to be looked at and watched going forward this week. If there's anything else to short. And as I say, I don't like to short, but I did talk about shorting Intel probably the first day or so that it dropped below the 200-day moving average. And boy, a semiconductor has been weak. I guess you have to ask, can you see a rally of substance in this market with semiconductors and banking being some of the technology and banking some of the weakest sectors, and look how hard Intel has fallen. And had I been smart enough to have actually shorted it here when I talked about it, it's had a nice run up, and you can just trail a stop at a little bit above that 17-day moving average. Well, if anybody's got Matt Bryan in their fantasy football team, you're going to be kind of excited because it looks like he just booted a 54-yard or 55-yard field goal attempt for the Falcons to stay undefeated. All right. Starting to get a little tired here, so probably going to wrap this up in the next couple of minutes. So just going back and looking at 1 second. Sorry about this. As I said last week, home building got clobbered, and you could see, just look at a couple of these. And so one place to potentially look at shorting could be ETFs on the home builders if you believe this is the start of something bad. I look at it as potentially a great buying opportunity. Why? Because what do I want? I want to buy at the right place. So here's free parking. And here, at least on D.H. Horton, the 50-day moving average has been a good place to buy. Looking at Ryland, hasn't gotten down there yet, but it may give you an opportunity. Look at the earnings per share growth here. I think with the earnings per share growth and the gestalt that I have overall that this market is going forward, it's hard for me to lose total faith in these, and I do think some of them may be setting up a buying opportunity. On that note, let's now go and look at a couple other things very quickly. We're going to go look at that top 10 list in a second. I want to take a look at. Within the program, in the warehouse, if you go into all securities and you go into HGSI strategies, Woodward and Brown, reference library, and you look for, see where Sprinters is. Pretty certain it's in here. This is something that was placed here by David Gallardi, and most of you, I'm sure, are using it. It's basically a sprinter's view, but you could also just go in here. I use it here, and it is a combination of Sprinter one-step with Bongo is the filter, and then the combo ranking is Sprinter one-step with Bongo. So those are all within the program. And this identifies a list of some of the best stocks in the market. And let me comment on a couple of them that I saw earlier today. So what a shortcut. A filter and a combo rank called Sprinter one-step, taking your 8,000 stocks down to 36 stocks. And now you have to go and do your own review. Patrick, we looked at Altisource is in your top 10 list, or top 8 list, which we're going to finish with in a minute. And you could see a very powerful up move here in an uptrend. This is about 60 to 112, a little bit of a pullback here. It looks like it's setting up to run again. Not a cheap stock, but certainly looks attractive. Flagstar is a bank, I don't know, but pulled back and running up again. Talked about this a few weeks ago. This is in the mortgage industry. Commented, not sure how much confidence I have in that industry, but it certainly is also, as I call pinball action, I guess Kramer came up with that term, off of the housing industry, and you could see just a huge move that occurred, and I think we had a call the day before this happened, and I specifically called this one out, but it wasn't that impossible, frankly, to have seen. So a very nice move on Owen. It's pulled back, and I think it's going to go again. It's got great earnings per share growth coming in. It's one of the strengths in this market, and there's no reason that says it can't continue to be one of the strengths of the market. All right. Tell my energy level has dropped a lot in the last few minutes. So let's go back to scorecard no index, and let's go down and let's real quickly run through your user group that I picked out in your web gems, and let's see how many of these stocks have we actually already talked about. And here's one I don't know. Important to look at the right date because this market has had so much ups and downsies. All right. So there's 8 of them. We're going to close on these and see if there's anything that we pick up here that looks attractive to buy. I already talked about ASPS. It looks nice. got yourself a little flag here. Does this mean it runs from wherever that is, 88 to 112? So you have about 30 points there. Can you get another 20 to 30 from here? Does this flag it runs again? Maybe. JB Hunt, we already talked about this, the best of the transports. Transdigen is one of these expensive stocks that has just had a really nice move over time. Let's look at the weeklies. Lower left, upper right-hand corner. Like ASPS, an expensive stock. Don't know anything about this guy. It looks like it's a buyout or something, so we skip it. Had a pocket pivot and a nice day on Friday, but don't know anything about little Chinese stocks. Blacksat Bancorp, I sort of ignored it earlier. It was the second one on the sprinter list. And here you have I assume a financial stock, Thrift Mortgage Finance, so maybe in the same industry as OCN. Nice looking chart. We looked at Macy's. Pull back, run back up, pull back here. Looks like it's running again. Conexa, the buyout, we'll skip it. Lennar, we talked about, maybe it's time, a buy point to get into some of these housing stocks. Some of the others have pulled down to the 50, $2 away here. If the market continues to go south, you may be able to get lucky and get it closer to the 50. And that's it. So, go back to my start. So once again, thank you for joining me. We've had the opportunity, done all this today, do a top-down view of the market, identify some stocks, show you how I use that group inclusion filter, looked at sprinters as a source to find some of the top stocks of the market, looked at smart groups, specifically when I use my group inclusion filter. These are pre-run combos and filters that are run on a nightly basis that help you figure it out fairly easily, the best stocks. For those who are on the HGSI site and have not seen this before, I have started a YouTube site, and all you got to do is go into YouTube, and if you search JAS Answer Doc, you'll find my site, and you'll find all of these that I've been doing here. Hard to know what to do with these view numbers since most people download this from HGSI, but I'll have the back copies up here. It'll be in both places soon. Have a great week trading. I can't reiterate enough that as I looked at the market, and perhaps this isn't necessarily a negative feeling, as I looked at the market, I was fairly stricken or driven, whatever the appropriate word is, by the fact that all the major indices look like this, with pullbacks down to their 50-day moving average. Perhaps we're halfway down to a 7 or 8% correction at the 200-day moving average. But they are at a natural site, a natural location to expect to see a bounce. And so you might see a pop this week. Obviously, the news will have a lot to do with that. I hope to see many of you in Palos Verdes. And if you like what I'm doing here, please post it on your favorite boards with the JS Cancer Doc link for YouTube, because what will make me continue this over time is if I get the impression that I have people watching it who want to continue to watch it. And thank you all. Have a great night, great week, and see you all later. Thanks.